Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Oh, right, we're going. Hey, guys. CPI today. Oh my gosh. Can you feel... I'm a little bit overwhelmed by this feeling of electricity that we got going here. Consumer price index, this number is being hyped up by the media to be like so like that this just means everything. Yeah, in all reality, okay, so I think that last time's CPI number was probably more important in the long run. I think that this number is going to reflect similar things and just kind of confirm what I've been kind of feeling for the last month. You can see people are already buying ahead of the news. Like S&P 500 is already above 4,000. So everybody is expecting this number to be good. That doesn't necessarily mean that it will be, but the market seems to think that it will be a good number. But like this time, everybody's paying attention. So regardless of what happens, you're going to get like a month's worth of activity come out here all at once. This is going to be absolutely insane. So I appreciate you guys being here to watch it with me, and just don't blow it all, okay? Just don't blow your whole account on it, all right? So let's do this. Remember last CPI where market did a little jump up minutes before the number and it was below expectations? Well, yeah, sure. But again, that time, you know, there's no way for us to confirm that like somebody knew the number beforehand, either through a leak, because last time they kind of said that it was a leak and the leak was in the correct direction, but I don't think that the numbers were correct. But I think that people just feel confident enough about what they think the number is going to be to take big bets ahead of it is what I think is going on. And just in general, you're going to see a lot of activity. You're going to see a lot of activity. Yeah, last time there was a claimed leak. Claimed leak. Had a breakfast sandwich and the eggs were a little bit runny. Now I'm making sure I'm all clean. So yeah, we didn't have like a claimed leak like we did last time, but I mean the amount of activity that I'm seeing go through the treasuries here before the news is quite, it's a lot. Okay, now note that US CPI year over year is kind of the number that the banks like all base their scenarios off of, but we still want to look at core CPI month over month. And note that there is like a big divergence between the headline month over month number and the core number. So the headline expectation is negative 0.1, but the core expectation is 0.3. Okay. So while everybody is expecting this huge number and everything, we may have an opportunity to read some nuance into this number. Let's just see. Yeah. Because what if things came out and US CPI month over month came out to be a lot higher than expected, but core CPI was lower than expected? You know, that sort of a thing. Oh, I don't have the voice clock. It didn't start. Hold on. There we go. Well, I'm surprised that anybody in the micro treasuries is willing to stick their neck out here at the moment. The regular markets already appear to be pulling. I'd expect here in about 10 seconds we get even more of that. Dollar getting moved. I don't have my charts up, so I can't see that yet. We'll turn the charts back on about 15 minutes after the news, but there's going to be so much data coming in. I want to limit what's going on the machine. You can see now that we're a minute in. Almost all of the liquidity in the treasury is pulled. Micros have a big spread there. You ever seen such a non-event overnight range? Are you saying that the CPI is a non-event? I do think that I don't think that it's going to change our picture of this the fundamentals, but I think market's just being overly cautious. Okay, so they're moving down. That's not good. Okay, so it's the headline number is in line. Everything is in line. Everything is in line. Oh my gosh. Wow. Look at this thing go. So the bank scenarios for inline was still a modest rally in the S&P 500. But at least on the initial move, all of the markets have moved down quite aggressively. I wouldn't say that it was super insane. It's certainly it's actually kind of a lot of what I was kind of suggesting, that like the December CPI was the one that really gave us the important data point that lets us know what's going on with the fundamentals. And this is kind of more just a confirmation. So for some of those people out there that were kind of being overly cautious, you know, now they're hopefully in line. Okay, there's a big iceberg there at 114.11.5 in the 10-year. So there's definitely something going on this volume node right here. If we thought that this was positive, I don't know what to do in this situation, to be honest with you. I think you could try and take a trade here on either side of that iceberg. Is probably a good place to try and catch something. Man, that's crazy. So the S&P 500 dropped about 25 points when all of the numbers came in exactly in line. You know what? Like for both numbers, for both of the month over month numbers to come out in exactly in line with for both of those numbers to come out exactly in line with expectation is a little suspicious to me. like that number they have not gotten that number right like for 2 years, and now it comes out exactly. Like, what? Okay Hey, it's good in the long run, I guess. Well, did you see Nick Timmeros tweeting overnight because the Fed is coming out with a lot of studies the past week, and one of the studies shows that unemployment is not as strong as the BLS report says. Did you see that? So now another Fed report suggesting that the numbers are messed up somehow. That doesn't necessarily mean manipulation, but you have to consider it at this point. Okay, so we are getting activity on the micros again. Okay. This is a really messy. This is a really messy order flow, don't you think? No date charts from now. I'm going to wait. Actually, we could probably turn them back on now. I didn't even start Ninja Trader because I was worried that this news event would be so absolutely insane, and I just wanted to limit the amount of data and processing power I was using. But this isn't too bad. I'm kind of hesitant to start it just at the moment because this is still kind of moving and they haven't really decided what they want to do. It looks like after that initial downside that they are recovering. I was saying buy at 11.5, wasn't I? Although that does not quite match what the yields are doing. The yields are doing crazy stuff. Okay, Harker is speaking at the moment. I've definitely been gun shy the last few months, haven't I? Okay, so Harker, there will be a Q&A with the audience. Ooh. We gotta be careful because he could come out and say something hawkish. It's dollar dropping now. USD selling, picking up anyways, says Forex Live. Darn, missed it. There was like a good reload there. There we go. Look at that. Easy scalps. For those little ones, man, when you got like a clear direction, sometimes you can just get really... I'd say I don't think that you could live off of those alone because I feel like you only get a move that's strong enough for that kind of a trade like once a month. But when they happen, it's like guaranteed little... I take that back. You know what? There's a lot of risk on something like that because if it doesn't like fill right away, it could like move away from you so quickly. But it's just really fun to take a trade and then get a tick like within seconds, right? they detected my buying there. They're like, we better pull back now. Seth's out there. Yeah. Just a fun, I mean, I was on sim. Just having some fun there. I'm sure that some people are going to be disappointed that this wasn't like a good number and that the market just like totally shot out of here and everything, but this is way more interesting to me. It's an interesting shift. Okay, I think that we've slowed down enough that I can probably try starting NinjaTrader here. Okay, so a little bit of stacking there. A little bit of stacking there. Lucas. Lucas says Seth. I say Lucas. Yeah, look at copper. So my charts are loading up here, and the first thing that I see is copper. Nice upturn in copper. And I'm getting my market analyzer here. Biggest winner this morning so far, natural gas up 5.29%, followed by silver up 2.51%. And the biggest losers so far, actually, NQ. Should I have order book performance with rhythmic set at max? Probably not, but you would have to really, so here's what you do. If you open up the Rhythmic Trader Pro thing and you open up the quote board, and you can see how many messages per second you're getting. So with just these two instruments right now, I'm getting well over 1,000 to 2,000 messages per second. So you can use that to measure how much you can limit it. But you should limit it based on what your computer can handle. You're just going to have to experiment. But if you have that, adjust performance based on market activity or whatever, I don't know if what you set that to overall really matters that much. Okay, so I can see here that on the initial move, the dollar actually moved a little bit higher, and they dipped down as low as 102.1. They are now currently in a pullback, if not beginning to turn back down. Also, in the treasuries, of course, this is tick replay data that I'm getting in here because I didn't have NinjaTrader open at the time. But it looks to me like the order flow in the treasury is actually net sell. So we're just, okay, so everything's loaded up here. Just to go through, look at some things from our indicators. You can download my indicator suite from speculatorseth.com, and the most important one that I'm always looking at is that spread, and you can see, even though the treasuries seem to be selling, 5 years kind of a little bit mixed. I'd say they were a little bit higher, but overall net selling, right? Despite the selling though, the yield curve steepened. That is good. That means that they're expecting the Federal Reserve to kind of back off on the interest rate increases. Also, something, this one is not my indicator, but I always like to look at like autocorrelation and everything. Pretty big autocorrelation coming through here at the moment. And of course, my positioning model here is showing the lines kind of show key price points, theoretical price points for market makers. But you can see that the price action is easily exceeding all of those levels as they should in a situation like this. So, and then the other big one you can get from speculatorsset.com down here at the bottom, the dollar. You can see dollar is kind of all over the place. Okay, so Nick Timmero's tweeting here, core inflation ran at 3.14% annualized rate in the October to December period, the lowest such reading in 15 months. It was 4.55% on a 6-month annualized basis, the lowest reading since May 2021. If I didn't use Ninja, what other chart package would I choose? Oh, that's so hard. Because I feel like that everything has... So here's the thing. Like, everything kind of has their pluses and minuses. I think that one of the things that I care about a lot is kind of more the community around it, the people that develop it, etc. Right? So like, if they're really responsive to their community, or I can build a personal relationship with them, and that's matters a lot to me, right? This is why I'm a really big proponent of Jigsaw, because they continually come out with new stuff for the platform. Like, and although for the last year or two, development has kind of been slow. Hold on. Okay, so we're getting comments from Harker. He sounds dovish. He seems to be saying that unemployment to fall back to 4% after rising this year. Remain concerned about commercial real estate. Labor market remains in excellent shape. He seems to think that inflation is going to come back down. Anyways, even though Jigsaw, they've been working on the charts and it's kind of slowed down, they're always working to improve the platform, and they do innovative things, and that's what I really like about Jigsaw. I would like at some point to have all of my indicators on Jigsaw and to just use Jigsaw. I think that Sierra charts is not a bad choice. I think that for me, Sierra charts would probably be a leading choice because it's a larger portion of my audience, right? So it's probably always changing, but it seems to me that for you guys that are here on the stream, that more of you are using Sierra charts than probably anything else. There might actually be more of you using Sierra charts than Jigsaw. I think we did a poll, didn't we? And it was kind of even. Oh yeah. I know I could code the indicators in Sierra charts. I went and like did all of the analysis. So if I recall correctly, there's a couple of them that I wouldn't need to because Sierra charts kind of already has them. So like, I think that Sierra charts has a spread chart of some sort. But the dollar would be weird because the way that Sierra charts handles multiple instruments is a little, it's not as clean. You know, NinjaTrader, they've really set up a framework and everything for it, and Sierra charts they don't, so that's kind of difficult. My level 2 indicators, I even like did convert one of them to Sierra charts for research to see, you know, how much it would take to do it. But I suppose I could do it to Sierra charts if somebody was willing to fund me a few $1,000s to do it, but it would be a lot more difficult to make it in Sierra charts, especially the order flow indicators, because they don't do anything for you. In NinjaTrader, you just have to use the on market depth methods, for instance, right? But in Sierra charts, you basically have to like look at the cues and everything yourself. But I've looked at it and I've made an indicator with it before, so I know that I could do it. It's just like here's the thing. It would be a lot of work to do it in Sierra charts. It is a decent chunk of the audience, but it's not like insane. And you know, it's I don't know how much of a return I'd actually get on it. You know what I mean? I think that to make it worth it to me to do it on Sierra charts, I would have to like charge a lot more. Charge a lot more and put a bunch of the money into like marketing it or something. I'm kind of considering doing that with the NinjaTrader indicators anyways. Because what I'm finding, so get this, I put out that video about 24 tips and tricks in NinjaTrader. Video's doing very, very well. And with that, I highlighted the free pack. I've kind of had the free pack like out there, but I hadn't really made any videos about it or anything. So that was like really the first time that the public knew about the free pack. And I've already got 50 downloads from the free pack, right? So if you look at like your traditional like conversion rates, and it's like 1% or something like that, that's not bad. You know, in terms of like how many would go on to go and get the paid pack, right? But when you think about, okay, 50 and you take 1% of 50, which is like 0.5, it's like half of one, right? Yeah, you'd have to put a lot more money into it. You'd have to charge a lot more. And that's why most other indicator packages are really expensive, because you don't get as many people buying. I'm kind of getting a little bit like ADHD here. The point was, 50 people have downloaded the free pack, and I'm just saying when you compare that to how many people download the paid pack, like if it's free, a lot of people download it, but there's a lot of people in the Sierra charts and NinjaTrader world that they're not that really interested in spending a lot of money on indicator packages. It seems like there's a small number of people out there that just like go and buy everything they can get their hands on. But Uzi's idea is paying off. Which idea is that? I really think the thing that I could do that would really be, you know, do well, I guess you could say, and bring a lot of value to people is creating my own full platform. But I think I would need like millions of dollars to do that. It'd be a lot of work. To pay like hire like 3 guys, me and 2 other guys, spend a year working on it, you know, $1 million between the 3 of us to develop it. Okay, dollar's fallen back towards its lows, and we're seeing all of the markets kind of leading up again. So it looks like this market is very much dependent on what the dollar does. Should have bought it. Yeah, I think if buying that initial dip wouldn't have been a bad idea. You know what though? When all that happened, that was one of the first times in a while when there was a news event and I really wasn't sure how to react to it. Like, I was like, okay, inline is good. That should be a rally, but we already rallied overnight. The initial move had us push down. Is it worth it to take a trade on it retracing or on it extending further down from there? I don't know. And is the order flow giving me any signs? Not really. In fact, right now, the indications that I'm getting in the treasuries, you can see cumulative delta for all three tilted down, even though the price action is tilted up. We didn't rally overnight. Sorry, I mean like rallied yesterday. Then thought we rallied a little bit overnight. Like, if you had asked me a week ago what price we would be at before the CPI, I would not have said 4,000. That's what I'm getting at. The market bought up into this news. It definitely did. You can see it. The last 2 days, we've kind of had upward action. Why is inline the economy cooling? Well, I don't necessarily think it is. No, I don't think that the news got leaked, Lucas. I think that people are analyzing the other economic data and trying to predict what the CPI is, and that everything that we had was giving a pretty good clue that the number was going to be good. Well, so like for instance, like what? So for instance, the jobs numbers were pretty okay and tame. We know what the headline number is going to do with oil, and oil kind of came down, so that helps you there. And then like all of the purchasing manager indexes and kind of those leading indicators were all slowing down significantly and showing price changes slowing down significantly too. So if you just go back and read the analyst reports, it was kind of interesting because this time around, the big banks kind of avoided taking like an outright position. They kind of said more like, okay, here's the range of possibilities and what we think happens in each of these instances. But there was kind of this undercurrent that like, we think this is going to be a positive catalyst for the market. Any recommendation for an EU exchange? Well, you trade the Eurex if you're in Europe, right? Hey, when things are okay, you get less opportunity. Yeah. You gotta prepare yourself for it, NASDAQ killer, because we haven't had it yet, but at some point it's probably gonna happen again where we move into this low volatility regime rather. So I was born in the low volatility regime, really. I started futures trading in low volatility, and it was always like, oh man, look at the way that the bonds used to trade. If I had been trading bonds for the last 10 years, I would have been really successful. But no, I had to come in after the party ended, and volatility just was like nowhere, you know? Well, it came back. We learned a lot. I did do better. The low volatility is like a completely different game. For someone like you, well, you know what you could do, NASDAQ Killer, though. You could just play the game that everybody else does, which is just go short VIX futures. Right? There's a VIX index you can trade on the CME. And you just go short. And when it doesn't work, it's going to be like brutal. But most of the time you win and you make a ton of money doing it. Okay, so the Street Tweet CME's FedWatch tool is now showing an 87.2% chance for a 25 basis point rate hike in February. Shall we go into the numbers of the report? You know, we didn't do that. That's something that we usually do, and I kind of spaced. I was just kind of like enamored by the amount of movement I was seeing. Well, so we dropped almost what, 40 points on the initial move? Even more than that, actually, to be honest. And now we're almost 20 points above. Yeah. Well, now we're coming into 7 o'clock, so the price movement in the equity markets is probably only going to get more interesting, huh? Okay, let's go look at this report. Yeah, it's a big move. If you had bought that dip, you made a ton of money for a short-term trade. Over here in the micros, I don't know. They didn't actually move that much. Well, 3.57. Or below 3.5 though, that's wild. Okay, so let's see here. The food was spot 3 versus previous month of spot 5, so that's good. That must not include eggs. Energy was down pretty big, 4.5% because of oil and so forth. Used cars and trucks continues to decline 2.5%. Apparel was actually up a little bit more though at spot 5. And then we got shelter. It was spot shelter was spot 8. So shelter's still running a little bit hot. Transportation services was up versus a negative 0.1 the month before, and then medical care services 0.1. But that's okay. For it to be 0.1, that's good, because the other changes in medical care services were like really big previous months. So medical care services, that one's actually probably that one moderating is probably the biggest change in here that you wouldn't see unless you went into the crosstabs. So that's good. Actually, that's really good. You know, the more thinking about it, remember this conversation we were having the other day? Was it yesterday? No, I think it was like Tuesday, where I was saying, you know, really it was Obama that screwed the millennials over because healthcare costs increased so much. And that's what's really eating away all of your income, because on a total compensation basis, you're making just as much as we ever did based on productivity and everything. But you're spending more of it on your medical care and so forth, right? Well, so at medical care moderating that will help the economy. You took one on oil? I don't think she's here this morning, but we had somebody that's doing the combine that did really, really well on oil yesterday. Okay, so my news clock just pointing out to me the yen is like at a 6-month low. They are at 128. So by the way, I didn't really say anything about this one, but in the free pack, I have an inverse indicator. This one's like really stupid simple, but I tell you what, it's so useful for the currencies because the FX futures are priced in dollars. So, you know, it's like 0.007, but almost everybody, the TV, etc., they tend to use the other way around because that's what Forex uses. So to take the inverse of that ends up being really useful to kind of judge when people are throwing numbers out at you. So that is in the free pack. You can go to speculatorseth.com/free.html and you know, put your email in and it will email the pack to you. Will you have a combine? Probably not. Listen, if a combine comes to me and wants me to do one, then I'll do it. But this year Seth is doing the you know, practice for starting a fund challenge. This is what we're really doing. So watching this, it does look awfully bullish. This is a move now where I have a really, really hard time being able to predict what it's going to do. So if you told me, I mean, we kind of discussed it a little bit before, but I wasn't this detailed. But I definitely thought that inline was going to be positive. So I was surprised that they had come back down that much. Okay. I wouldn't have predicted that we would like immediately recover per se, but I'm not surprised that we recovered and that we're a little bit higher. So now that we've recovered and everything, now they're kind of in line with generally what I expected. Okay. Now the NQ is up 0.76%. So I think I could see the S&P 500 up as much as 1.5% on the day. So I guess there could be more upside in the equity market. But just when I'm looking at it right now and I'm looking at the orders though, I'm having a hard time seeing if they can keep that or not, you know? And especially over here in the treasuries is like, I mean, for them to keep going, that would have to be like a trend day. But I am getting signs that we're like forming a liquidity hole, or that we're starting to come to like the extent of their impact in the treasuries here. So right now is probably not a good time for me to try and place a bet. Right? I should have come in and bought the dip, but I didn't. So I think I've become too comfortable not taking trades, huh? There's some good reloading behavior there. So I should be able to take a tick out of this, but it's going to be a little hairy. Okay. Parker says he expects Fed to get rates just over 5% and then hold it there. Fed's Harker ready to downshift to 25 basis point rate hikes. Yeah, I think after today that it probably is going to be like 25 basis point increase in February. Why do you prefer trading prior to the open? Oh, well, you know, I made some comments about that lately. I think you might be misconstruing what I'm saying. So, what I'm saying is that in the 30 minutes before the open, that is when the equities traders come in and start placing orders in the S&P 500. So if it's a day that they're going to trend, you can catch really good trades there, right? That's when, you know, you get it and it just runs. So the 9 to 9:30 time period is not a bad time to trade in the equities markets. Like, that's when the volume comes in, right? And we're trying to predict future orders, right? So something like that can predict future orders, that is kind of to your advantage if you can predict which direction they're going to be, right? So I wouldn't say I prefer trading prior to the open or anything like that. I'm just pointing out that time is a potential predictor of order flow in right. It's kind of funny because it's kind of like it's like a very limited thing, but like that's what it's always going to be, right? Is like what you can actually prove and really predict is going to be limited, but sometimes that can be enough, right? Because he's never around before the open. Well, he was here right from the get-go today. He knew that the number was coming and was here early. And you can tell that it was like, oh yeah, this was good action, and I didn't trade it. Which it did. Well, I was trying to just take a scalp there, so you can see here. I didn't put any stops out or anything, and it just was dismal there. Not very good. I'm gonna try doing some degenerate stuff here now. Still in, yeah. Well, you can see the S&P 500 kind of turned down a little bit. It still looks to me like they're very, very much following whatever the dollar is doing, right? Okay. Yeah, if you traded it prior to the event, your stop would get hit both ways. That's true. I've found very often. So like if we come and zoom in here a little bit. Okay. Something you'll see on these big news events a lot is like, even if it's really clear which direction it's going to go, somebody will come in and hit it the wrong way. It's like oh, this is a sell, and somebody will come in and hit it and clear all of this liquidity up to here, and then it will go down. It's like they intentionally hit everybody's stops or something. I see that so often. Yeah, you can't. Well, for an event like this, for what we're doing, you really just can't have a position on, right? Like if you go back and you look at the trades that I've taken during news, it's usually like I'm sitting here watching the micros, and I'm like, well, why is any idiot providing liquidity up here in this position? I'm gonna take this order here, right? It's for the really, really big news events. I usually wait at least 5 minutes before doing anything and just play it on a sim account, because yeah, it's like you can totally have the right trade, and the volatility can, even if it's not the initial move, but just within that first 5 minutes, you can just get this volatility that pops up out of nowhere and just destroys you, man. Your account's not big enough, but your brain is. I'm telling you guys, I really think that the CTA route is the way to go. I think that the challenge with the CTA fund manager route is that you kind of have to have connections to be able to get people to invest. You have to know high net worth individuals. But if you could convince, enough people to put $1 million in, and then you just made $300,000 off of it that year, you could totally do using futures. Hey, like 1% fee or something like that would be like what, maybe $10,000. That's good. Oh, I haven't heard from Ace in a while. Well, I tried cheating my way out of that, but it didn't work, so I gotta puke that one. This is disappointing because I really felt like that reloading behavior up there was really positive looking. I'm quite dismayed by how quickly it turned down. I think the thing I have to remember here is that the liquidity is quite strained, and we did have quite a strong move up, so like any kind of selling that comes in here like really hurts, right? People now claiming time charts show algo activity. Okay. Like my approach to these sorts of things from technical analysis is like, okay, maybe you can see certain things in the chart, right? Like I think that the chart suggests that people were buying ahead of the CPI and that they thought it was going to be positive. Okay, but that doesn't predict what's going to happen next. That's the issue. Like you have to think of it from a cause effect standpoint, right? What the chart being a certain way doesn't cause it to move a certain way in the future. Doesn't, right? Market would not move the way that it does if that was the case. Oh right, you're right. I forgot about that, Lucas. Like the whole contention was that correlations matter, and he didn't think that they did. I was like, okay, man. This is the thing that keeps getting me is this is what's in my PDF that I'm writing right now, right? Is that you want to have you want to be looking at the news, the order flow, correlations, your risk management. There was a fifth one in there somewhere, but I don't recall what it was. But these are things that I think everybody needs to look at, and if you don't have that complete package, you're gonna struggle. You're gonna have a hard time understanding why the market is doing what it's doing. Markets are so efficient that everything was priced in and not priced in at the same time. That's why. Well, yeah. So this is, man. I wish I had a better like. I wish I had like better messaging on this, because I don't feel like that this particular subject like really. I never really get like strong engagement or response to it. But markets don't price things in. They try to price things in, but the nature of the order book is they can't price things in. So what happens is the orders move markets. So the market moved up because they were expecting the news to be good. That doesn't mean that the price that we had before the news was somehow reflective of the market's expectation, right? The price itself is a result of the orders that went into it. So it's at that price because of how much they bought. And they might try to buy it like based on a certain price and everything, but the reality is that it doesn't. So you can't say that it's priced in, and that's also why you can have situations like today. Like I think that it was in line with expectations. So the market pretty much got everything right on, right? So if the market got everything right on, that means that the news event did not in fact provide new information. So from a fundamental perspective, price shouldn't change, right? If markets are efficient, informationally efficient, and we just got a news event that's in line with expectations, then there was no informational change, and therefore there should be no change in price. And yet we moved down like 50 points and then right back up. Why is that? Because the orders are what moves it. The orders represent expectations? Sure they do. The orders do represent expectations, or some of them can. Some of the orders can represent expectations, but the price that results from that does not necessarily reflect the expectations, right? It reflects the orders that were placed into it, and the orders, from what we've found, don't really think about the price like that. Because the market was unsupported by market maker. Well, there wasn't, there was the liquidity pull and everything, so that makes it move a lot, sure. I'm not 100% sure why they sold off initially, to be honest with you. But, somebody had a reason to do it. Yeah, the orders don't think about price. Yeah. I'm going to be careful about how I say that, but I would say the majority of orders, they don't think about price like that. They just think about whether they need to buy or sell, right? So, but the whole thing about that is that there can be situations where, regardless of what the current price is, those future orders are going to come through, right? So because of all of the options bets, and everybody's watching it and expecting to trade it anyways, and all of that, this thing is going to move, right? You knew coming into this news that even if it was in line, that the market was going to move a ton, right? Yeah. No, you were agreeing with me. I was realizing when you said that, it was like, I was like, okay, I was a little bit too broad in my language. It probably doesn't matter, but I'm like really cautious about that sort of stuff. I saw this thing the other day because I'm ADHD. Okay, I'm not autistic. I'm ADHD. So in some cases I may seem autistic, and that's just because there are certain things that I just don't notice. Right, I'm not paying attention and I miss them. Certain social cues and stuff like that. Right, and but I was told that neurodivergent people have like a strong sense of justice and things like that. So I'm really cautious about like that. What I'm saying is as accurate as I can make it, and that your guys' understanding of what I say is as correct as I can make it. So that's all that was about. Wasn't really a huge deal. Look how many DOMs you have. I have a lot of stuff up, don't I? People who are legitimately ADHD don't respect other people's right to chill, in my opinion. Kind of depends on people. When I'm not on medication, I'm overly chill. But I definitely, I tell you what, so I have, there's a guy that I work with at work. I'm pretty sure that he's ADHD too, but he's not on medication. And man, sometimes I just get so mad at him I don't hate the guy or anything like that. I actually think he's really good. But like sometimes, like the thing that made me so mad yesterday is I was like, okay, try just checking out this repository. So like I go in and he's like, no, go to the command line, blah 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 blah, and I'm like, no, because if I go to the command line, then I'm gonna have to go and load the keys and all of this other stuff to be able to do anything. And if I just open up source tree, it's already set up and saved. Right? I didn't ask your opinion on which tool to use SVN. You just said check out the thing, right? I think the thing is that he has like this pathway in his mind of how he can do it, and he can only think about the pathway that he knows. And if somebody's going down a slightly different pathway with a different tool, it's hard for him to keep up and then say, okay, so now that we've done this, we should do that, right? So that would totally be an ADHD thing, right? Is, you know, it's, you have a hard time with your temporary memory, so you have a hard time keeping track of where the other person would be in the process anyways, and being able to think, you know, generalize the particular subject so that you can give advice customed to different tools, right? And you know, I'm, but the whole thing is like, I'm not chill enough about it, you know, like I get so frustrated by it, and I really shouldn't be. They purposely, no, that's probably the way that a neurotypical person feels. So the thing that you gotta, so here's the difference. Here's how you can navigate this. I'm still kind of working on like simple kind of, I'm still working on coming up with a heuristic that can help you do this, but I think I can explain in general terms why this happens, okay? So your frontal cortex is like a large neural network, right? There's all of these different neurons and stuff, and you take this data that comes in and they apply this general you know, so for instance, in machine learning, you can do things like you can project you know, if I have a data series and it's going like this, then I can project that it's going to be up here. That sort of thing, right? So that's kind of what your brain is doing, and it's taking all of these separate pieces of information and the context in which they're in and using that to make a decision and come out, right? The person with ADHD, they can do that, but it's slowed, it's delayed in the person with ADHD. And so the person with ADHD relies much more on the linear and logical circuits in their brain instead. All right. So you're going to come in and you're going to say, okay, let's approach this certain problem. And your neural network in your frontal cortex is going to say, okay, based on this, and this is like the first thing that I should look into, for instance, right? And the person with ADHD is just going to look at the first piece of information and then look at all of those pieces of information to see whether they're relevant or not, right? So he's going to go into a particular piece of information that to everybody else seems irrelevant, right? And so that's where you're going to feel like that they're intentionally putting a wrench in the process. Is like they're derailing the thinking process for everybody else by going through each piece of information individually, right? Instead of using all the heuristics that we typically use, right? And so that's really frustrating, because it basically, it feels like the ADHD person is always interrupting. But the reality is that that's what's happening to the ADHD person, is that his brain is constantly being interrupted by each new little piece of information. Now, it can be useful, especially for things like, you know, engineering, trading, etc., right? So like in trading, you might not want to sit down and think about all of the individual things that Seth is talking about, because it kind of seems like, well, this is dumb. Why is he talking about that? Right. But the reality is that in order to make a good trade, you do have to go through all of those things. And the reason why trading is hard and we make a lot of mistakes is that all of those things really matter. And our brain is trying to make this shortcut that just doesn't work in that particular situation. Right. That makes sense. I shouldn't say does that make sense. I should say was what I just said there coherent? Because sometimes I'm not sure if what I said was like an effective delivery of the concept, or if it just sounded like jumbled nonsense. Scalping, market making. It wasn't really something I could relate to, but I could interpret it. Yeah. So here's the other side of it, is that what will happen is you're going into a project and the ADHD person will say, we should look at this. And the neurotypical person will immediately know, well, that makes no sense to look into that because this is already, I can already eliminate that as a possibility because of this reason. And the ADHD person will think through it and be like, okay, no, that doesn't make sense. Then this. And they're like, what's wrong with this guy? Is he stupid? Something like that. And so the neurotypical person immediately starts to create this judgment about the ADHD autistic person, right? So there's been this research that neurotypicals pick up on the difference within 5 minutes and start to reject them. That they'll start to be rejected like right away. And the real way to deal with this kind of social situation, you're neurotypical and you really want to be savvy about it, is to just acknowledge in your mind, this person is neurodivergent and they're going to be good in certain situations, and there's going to be certain situations where I'm going to be good. And these are the kind of situations that they are. And to not make this judgment about that this person is stupid or anything like that. And that when you're working with them, that you just kind of have to go along with the flow a little bit. Because if it's a situation where that person really has expertise or they're really good at it, right? You might find it frustrating to follow them at first, but you'll be rewarded if you just stick with it. And when you get those, when people work together in teams like that, then you can do really, really powerful stuff, right? But you have to get past the judgment. You have to get past the judgment that basically prevents you from being able to take advantage of it. I'm sure that there's a lot of ADHD autistic people out there that would really like what I had to say, but a neurotypical person is probably like, okay, I'm just going to go do my own thing. You don't want to do it, I understand. But you just gotta understand, this is how your brain works. Your brain naturally wants to go down that way. It's like, well, this guy, that's not what I would have thought. So I don't really like this guy. Okay, well, we're getting the pullback after the pullback, and it's kind of not going as far. So we're definitely into square root law territory. S&P 500 first 2 minutes moving quite freely. Initial order flow on the open appears to be to the downside. I'm seeing spreads maybe starting to moderate a little bit and flattening back out. I don't know what you mean to be neurotypical. So, generally speaking, we're talking about people that are on the autism spectrum versus people that aren't. So like ADHD is a deficiency with neurotransmitters in the brain, right? Autism is different brain structures, like the brain because of either some other genetic thing, or it could be because they have very severe ADHD, and there could be environmental factors, but because of all of these different things, their brain, it literally, the structures are different, right? So let me try and give you an example. So I have two sons. The first son is autistic. The second son has not shown any signs of being autistic yet. Okay. I don't know how serious it is with the first son because he'll turn 3 in February. So he's almost 3 years old. He doesn't speak at 3. Okay. So that's unusual. But we don't know how severe it is. You just can't tell from at that age. Okay. He might not start speaking until he's 5. Like, seriously. So when he was a baby, and I would put him in the jumper, those like little jumpers, and it has like elastics, and it holds them up, and then they can bounce and try and practice walking, right? And this jumper has like a mobile above it, so the baby can try and jump and try and grab the animal, right? So my youngest son that is neurotypical, he gets in the seat. The first thing that he wants to do is try and grab that animal. That's the first thing he thinks to do, right? Like he understands, oh, like that thing is there, so I can try and grab it. It just automatically makes the connection that that's the thing, right? My autistic son, he never went for it. He never tried to grab the animal. I would like try and pull it down and like dangle it and like do all of these things to try and get him interested in it. He just didn't care. He only cared about the thing that was right in front of him, which was, oh, I can jump. And that was all he cared about. Right? That's the difference. Right? Is their ability to take in all of the information that they have and quickly make a plan of action as to, which things I want to pursue first and so forth, right? Basically, it's like executive functioning, right? And somebody that's not neurotypical does not have as, sorry, and I forgot the word now. Neurodivergent. Somebody that's neurodivergent, their ability to do that is not as strong, right? Had no idea you were dealing with that. What, the son? When he first started to walk, I just thought that, oh, all kids are difficult to deal with when they start walking. No, that kid is different. And it is hard. I can't leave anything out. You everything you have to put away. Okay, like if you use lotion and then you put it back on the counter, he's gonna get it and he's gonna spread it everywhere. You can't leave anything out. That's the other thing, is that he'll go for the destruction every time. Like he can't say, oh, I want this particular toy. I know it's in this box. Dig through the box, find the toy, play with the toy. No, he can't do that. He has to dump the whole box out. Have all of the toys out where I can see them, and then the one that I want to play with, it will stick out to me. And it's, I was a lot easier for me to make videos and record stuff every weekend before I had that son. And now it's like impossible to do things. Yep. But it gives it like really good examples of like where neurotypical and neurodivergent people differ, right? And you can kind of look at where the neurodivergent person kind of has an advantage in a game like this one in particular, you know, and then if you're neurotypical, you can kind of utilize your advantage in executive functioning to really take advantage of that, right? So what is the advantage of it? Okay. What is the news? What is the current order flow, market conditions? What are correlations doing? Like, what is my risk management? You have to think about all of those things when you take a trade, right? And you need to think about all of those things when you're watching the market action. And if you don't, then you're not going to completely understand where the market is at or why it's doing what it's doing. And you're not going to be able to make sound decisions. And furthermore, you have to resist your brain's natural tendency to try and extrapolate from trends and predict what it's going to do based on past data. Because in this particular field, the past data is not very indicative of where it's going to go. So it's much better to look for cause and effect, right? This thing happened, it's going to force this group of people to take trades, and I can anticipate that future order flow and front run it. That's a much more effective way to trade, right? The neurotypical person comes in and they try and treat trading the way that their evolutionary brain evolved to hunt animals, right? Oh, I see tracks going this way. That must mean that the animal is over here. That's what your brain wants to do, and you have to resist it. And you have to recognize that your brain is constantly going to come in and say that to you, and you have to resist it. So you notice I do it all the time, right? I'll come in and I'll say, well, S&P is down since the open. But that doesn't necessarily tell me anything about what it's going to do next, right? So I'll point something out that I noticed, and then I'll explain why it doesn't matter. I do that all the time, right? And it's because I can't help but notice. Well, so some of those things might be useful. They might tell you something about the current conditions. It seems to me like the current conditions are that the S&P is selling. Man, actually, you know what? I'm just realizing like how much... Was it this because of ZB? Yes, it was because of ZB. I'm just realizing now that we were all as low as 3.46 and now we're at 3.53. So that's a good $70 just in the last 40 minutes. That's a pretty big move. I should probably be trying to do something here in the micros, but I'm not too sure. I do kind of feel like that yields are a little too low. I'm also not seeing this kind of movement as correlated with like the 6J as it normally would be. It is kind of following the dollar though. It looks like the dollar is still in charge here. The selling in the S&P 500 is getting quite excessive. So the amount of selling in the S&P 500 is telling me that there's a major flow of some sort that, you know, we might have been able to expect, which could be profit taking, right? We were talking about last CPI rather, you know, like there was a huge spike on the initial move and then like they gave up all of it afterwards. And I wouldn't be surprised if we see something similar happen today. Well, it was more mixed action, but if people were buying into it, you'd have to expect some selling. So they're giving it all back here now. Jeez. But do you see? So like now I just went through the whole thing. You might have wanted to try and skip ahead. You might have wanted to say, well, this piece is relevant and this piece isn't relevant. But what I'm telling you is everything that I just said there is relevant, right? That's the difference. Oil's kind of coming back too. I'm seeing the micros move a lot here too. Let's see here. Another thing is we do have another Fed speaker later today, right? Not until 9:30 Bullard speaks. It will be interesting when Bullard speaks. Where is he speaking at? No, it's not listed on this one. You're on the Asperg spectrum. Or ASPD? I don't know what that stands for. Maybe you should. Antisocial disorder? Oh, okay. Yeah, I think one of the things that I seem to have a hard time with is that the medication works by increasing your norepinephrine, and so I'm always like go go go, and it like stresses other people out, you know. Like I can be in like a really tense situation where like, you know, we're practically yelling at each other to try, you know, while we're trying to work something out. And to me, that's just like, that's just normally what you do when you're in a tense situation, and it's fine. And that can actually help you work faster. But other people are like, oh my gosh, no, that's not. What is wrong with you, Seth? Chill out. Not like that during the stream because I'm on the full load of medication during the stream. I'm gonna reset the flow here. I'm gonna do it on all of these. It looks like they might be turning down here. The dollar kind of shifted a little bit. Yes, I have to trade $50 a month for Jigsaw live trading. Oh man, I was looking at like what my monthly expenses are for it, and I mean, I guess I knew that it was that, but seeing the actual number, I was like, oh man. So it's like $50 a month for the Jigsaw. And oh, I don't even remember. Yeah, and in order to the live license is like to enter orders on the DOM. So if you don't care about being able to click and move orders around like this, then you don't have to pay for the live license, right? You could still go and use your other tools. Like if you're using the bridge or whatever, you could still come in and use your platform's other tools to actually execute things. But in order to take live trades and like move things around, yep, you gotta move them. So it's hanging out here where we reset a bit, but I am getting a little bit of steepening. You really want me to make a trade, huh? Why is that? You understand that I don't really have control over whether there's a trade there or not, right? I've got to know something that's going to predict the future orders. I don't know if I do at the moment or not. I am kind of on the lookout here though. So we may be getting into a spot where things could shift again. Let's just see. Market short into support. I do think here in the S&P 500 that it might be difficult for them to stay below 3950. So I'm not actively trading the SPOOs, but I think that if I was trading the SPOOs, that's what I'd be watching. It's like I'd like to see it go through 3950 and see like a stop run, and then it slow down, and maybe I'd take the reversal then. Because the options are probably going to get it like pinned at that price. Just like the options probably made it difficult for them to stay above 4,000. I have to debate with myself what my stop loss is going to be. You always got to know like how much you're willing to lose on a trade. That's the way that I would approach it. Because once you start taking multiple contracts, like all of these things change, right? This could just continue selling in the treasuries. Like, I don't know if there's really a whole lot to stop us here. And before we were looking at like 3.45, like this is moving. Kind of looking at this 10 area down below us. There's that 13. There's a big order there. I'm watching the flows. It looks, I do see the S&P rallying a little bit here. Yeah, if I want to buy yields, it keeps saying 3.56. If I was famous, Andrew Tate would find me offensive. What? You know, last night I took some Tylenol before I went to sleep because I've been a little sick, and my nose has been inflamed and stuff, and I slept so good and it feels so much more clear, and I just breathe in. Feels so good. Feel cold, clean air coming in. Spending a little bit more time here than I thought it might. Are we getting... One of the things that I'm noticing is that it's kind of slowing down here and the volume is just pushing through it. So like I'm getting evidence of a large meta order being executed. Like we're coming to the highs here in micro yields. Isn't that something else? A gap, I don't know what you mean distinguishing styles. Just remember that every 50 points in the S&P 500 is going to be significant options positions that could potentially hold back the market. So 3950 is definitely like a key spot. This is not stopping, dude. Nope. Man, as soon as I hit it, kind of gapped back up. It's kind of starting to look like the market makers are a little strained here, though. Like some of those down ticks were on hardly any volume. Is it? Yeah, the dollar's coming back really strong. Is the dollar gonna breach the highs of the day? What? Hoping for a broader market turnaround here? I don't know, man. I don't like the way that just went for me, though. I think I waited too long because I'm looking and there was like some quite a bit of volume that just traded there, and it's kind of reversing. Well, it's trading up and down on 1,000 contracts per tick, so who knows? I still don't get the macros, micro. So the micro 10-year is going to be opposite of ZN. So in this instance is going to be opposite of what everything else is doing, basically. It's not always the case, though. It's always going to be the opposite of ZN, but ZN and ES might be positively or inversely correlated that day. Today, though, they appear to be positively correlated. Jeez. Yeah, it's not technically not micro ZN because it follows yields, which is a little bit different from what this follows. So all these teeny tiny little nuances with that get really interesting. Yep. When it's a risk off, then what you'll tend to see is S&P 500 goes down and treasuries move up. Some selling here in the 5-year. Look at that. This is like only down ticks on like 166 contracts. It was trading a lot more down here. The dollar kind of shifted down again. Like the dollar was coming towards its highs and then it stopped just short of it and kind of moderated, and now we're kind of watching it and seeing if the dollar's going to go for those highs or not. Okay, so that's a little bit of aggressive volume there at 17.5 and an iceberg. That's really curious to me. And they backed off 2 ticks. That's my sign to get out of this. So the 30-year is showing some volume here. It's not showing in the 10-year, but there's some volume coming in the other way. Yeah, look at that. Okay, Nick Timmeros tweeting, the December CPI is likely to keep the Fed on track to reduce the size of interest rate increases to a 0.25 percentage point at its meeting that concludes on February 1st. I think that we all already kind of knew that, but Wall Street Journal does have a tendency to move this market, so. So I should note that while I'm seeing the volume in the 5 and 30, I'm not seeing the autocorrelated volume long in the 10-year. It's like moving in correlation. I am seeing the dollar, it looks like it's turning down a bit again. So everything's turning up. Still looks like steepening though. Look at that. Do you see it keep moving up on like less than 500 contracts in the 10-year? We're coming back to the open in the 10-year. A little bit more liquidity here in this spot though. So let's see how they deal with the liquidity here. The volume definitely came through in the 30-year though. And they're taking at least a temporary pause. I see Seth always admiring ZN, yeah. Well, the reason why I'm always watching ZN is because it's the thickest instrument, and therefore you're going to be able to find more predictive signals in it. More flows that come through, the more likely you are to be able to find regular flows that, you know, like funds rebalancing and that sort of thing. Well, I might put orders in down here, but I'm always watching the flow in the 10-year. Zine is the big daddy. It's larger basket of the two, but it's getting slashed with the December contract. I bet TN will be the big daddy after that. From what you've told me, it certainly sounds like that TN matters more than it did. I'm gonna bet that ZN still ends up being the most popular, just because historically, but maybe over time it gets dethroned. Man, they definitely had a pause there. Was TN is taking more, well, it should, right? There's more liquidity over there in general, but you know, it's kind of interesting because, you know, the liquidity is relatively low in the 10-year right now. And, you know, if it gets split between TN, then maybe we just never get back to those liquidity numbers, you know? Like maybe the reality is that the liquidity is just splitting between multiple instruments. And okay, well, we definitely got some flows that came in there, especially in the 30-year to the upside as the dollar started to turn back down. but the ZN is not cooperating. The volume in ZN is still flat through this turn. And what I thought was just like a quick pause is basically like giving up all of those gains. Yeah, I don't like that. Uptick and it didn't hold, and they was that 523 printed, huh? It looks like there's a battle going on in the dollar here, man. It's fighting here. I don't know. I'm looking at the volume and I'm seeing at places decent support and whatnot, but I think that it's the dollar that's okay, so now the dollar just made a new swing low there and it is like really moving. So that might buoy the other markets. Okay. See, look, volume both ways in the 10-year, so it's still flat. Maybe a slight advantage to the buys. It looks like it's the correlation that's driving it, right? So here's a perfect example. Okay, I keep fighting to like find an example, but here's a perfect example. The cumulative delta in the 10-year treasury is flat. So why is it moving up? And then you turn over and you look at the dollar, and the dollar had a very quick move down. So the treasuries are rising here because of their correlation with the dollar, right? If you weren't watching the correlation with the dollar, you would probably be very confused as to what's happening at the moment, right? See how the market did what it already wanted to. Well, I don't know if it did what it wanted to do. It respected the range. Well, you know, so like when you said the volatility, so I don't know if this is what you meant, but the way that I would approach a situation like this is looking at what the options are pricing for the day, right? And the options were pricing in a lot of volatility, and you know, the analysts were saying that it was going to move even if it was in line with expectations. And I think the JP Morgan one was, if it's in line, that the S&P 500 could rise 1.5%, right? Well, it did rise a little bit, but day's not over. Maybe by the end of the day we're up 1.5%, right? But what we got was just the volatility that kind of the options kind of said that we would get, and then it's like they're having a hard time breaking out of that range, right? That range set by the volatility. That's the other component that I keep saying we got to consider, that I keep forgetting, right? You need to watch the news, the order flow, the correlations, the volatility, and practice your risk management. You need those 5 things. And if you don't have those 5 things, it's kind of like trying to run a race with only one leg. But in order to really understand what the market is doing at that time and have a sound trading strategy, you have to incorporate all 5 of those things into it. Or like I said, you're going to get these moves and you're going to be missing like a really key piece of information that would explain to you why it's moving the way that it is. And take cocaine, don't forget the cocaine. Stop. No, YouTube doesn't like that sort of thing, actually. Don't stop it. I'm always sitting here like, you know, a little bit overly cautious about making sure that the channel is clean for advertisers and YouTube and all of that. And if NASDAQ Killer or actually were running this stream, it would probably already be shadow banned, right? What's ED? I know what I think that stands for, but oh, the euro dollar. Look at that, new highs. I'm getting those good vibes from this being up. Didn't even realize it. Man. If the dollar, do you think that the dollar will go back to its lows of the day? Or let's just say 102. Do you think that the dollar will go back and pressure 102? That would be I can't remember like that much of a journey, let's say. Like, you know, like the number of pivots that you had. So we had like what? There's the initial spike, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 turns in the dollar. I can't remember a day like that, like ever. I wanted to say something, but Seth already called me out preemptively. Okay, but what I don't understand is what that has to do with short-term interest rates. Are you saying that short-term interest and short-term interest rates tends to create impotence? Wait, what did I take? What challenge did I take up? I think I was a pansy. Will our hero have the balls to take a trade? Find out next time on Speculators Set Day Trading. That's okay. That's a good uptick. That's a good uptick. Are we getting? I'm still not getting super strong volume along in the 10-year though. It might. Let's see here. Is there a spot where? Okay. Above 26 halves. 26 half is market maker long, average long. So maybe above 26 half, that could be a spot that kind of holds, but maybe we'll start seeing the volume change here now that we've reached that. Although on the other hand, on this extension higher, the 30-year actually sold into it. So the order flow And the price action are not in line in the treasuries at all. It's the dollar moving them. And the dollar is kind of chopping all over the place here at 102.36. Try sitting on 2,000 contracts and praying them to move one tick for 23 hours, then we'll talk about impotence. After that. Oh man. Akshay. So like this whole time we've been talking to you and I'm like, oh, you know, I wish I had a big enough wad to trade some of these things that Akshay is talking about, because it sounds like there's some better probability trades and opportunities for a small retail trader in those areas, because you know, and what you just said there just turned me off to the whole idea. Yeah, sitting and waiting 23 hours for it to move one tick, it sounds like an absolute, that would stress me out so much. I guess if I had information that really strongly suggested which way it was gonna go, but man. Yeah, they're having a hard time getting above that market making position. Yeah, this is so what I'm seeing here is that the treasuries are a little bit stressed out at this spot, but that they don't really control their destiny. What matters is the next turn that the dollar does. This is a little unnerving, but yeah, they're moving. Do you think that once we get to like February, March, and the euro dollar is basically gone, do you think that the markets will start to behave a little differently? Because it does seem to me, correct me if I'm wrong, but it does seem to me that the Fed Watch tool moves more now. Okay, so there was a stack there at 24.5 and he pulled it. I think he was pulling it just based off of the other liquidity and the other correlated instruments, but still 999 traded there, an uptick. Trade base. When you're doing an arbitrage, wouldn't the thing be you're trading almost purely on the arbitrage and you're trying to avoid the news as much as you can, right? Okay, I think that this is over. So in the end, that kind of just brought me back to break even, didn't it? Yep. Well, I made $2 on the day, but that probably just paid for the commissions. Oh no, wait, does this one count the commission? I don't think it does. No, I don't think it does.
See, when I started seeing that stacking, it moved away from it. I was kind of like, oh, okay. Oh, okay. Whoa, wait. Says, are you trying to give me a hint, bro? He's like, no, Seth, you need to stay in it. I have this huge stack at 21. Did you see them flash that order? That was very, very interesting. Was that 0.2 Oh, it was a move. It had moved from 10 to 2.5. So it was all the way down here. And they moved it to here. No, that's not right, because it was way bigger than that. Oh, wait. Do I have this? There we go. It was at 21.5. It was a 5K lot. Oh my. The largest limit order I've seen in a while. That was an interesting spoof. So you see what's happening here, right? Is I get out of a position. We're actually right at I was at 5.3. Ooh. So I got out at a bad place. And like big bid pops up immediately after I get out. So it's almost like they're like saying, no, Seth, don't get out. Don't get out. We're still gonna push it down, or whatever the deal is. But what am I doing here? That's that brain, right? It's trying to use the past, and it thinks that like what it did is affecting things and stuff. It's trying to make this prediction about what's going to happen, or see this correlation that may or may not actually exist. I need to ignore it, even if it was somebody trying to give me a hint. Right. We may yet see. There's still activity here. And the dollar is still kind of chopping around, so. Closest to risk-free arbitrage you can come to the modern treasury market. Why do you think I tell Seth to trade ZT and call for delivery? But how much money would I need to do that? What would be the minimum ZT? Well, let's see here. Contract unit face value at maturity of 200,000. So 200 for the bonds and 10K for the margin in mark to market. Okay, so we're gonna get $200,000. We're gonna make maybe $5,000 a year from it. Because I don't have $200,000. Right. I would have to borrow $200,000 from someone. And would I make enough to pay back the interest on it? No, right? So it makes sense. I couldn't borrow the money. Somebody would have to fund me. But is anybody going to fund Seth $200,000 so that they can make $5,000? Do any of you want to do it? If you want to give me $200,000, don't do it here on YouTube because YouTube will take too big of a chunk of it, right? We'll work something. You email me. We'll work something out. We'll start a fund. About 4.5%. Yeah. And that's just this year. Right. I still like the arbitrage idea. It's just I'm trying to think of something else to say about this, but it's just like it's not coming to me. I kind of feel like that to some extent I have definitely become like a one-track mind. Like everything has been focused on like trading this one thing, you know? And like doing something new is interesting to me, but I have a hard time seeing how I could fund and justify something else, you know? Like if I was going to, I think that it would have to be more like a stock portfolio. You know, it's funny because the thing I'm talking about doing is like maybe I make 1 or 2%, right? I didn't see. Did he give numbers on there on how much he was making that he outperformed? This thing is kind of sitting here being like, Seth, you shouldn't have gotten out. Look, you could have made at least $7 more. And then I sit here and I'm like, how silly are you, Seth, that you care so much about $5 when this thing just moved like $100. Oh man, was it $100 like net from the lows? 4.6 to 5.6. It is $100 overall. Wowzer. Wowzer. There's no way when we were like at the highs of the day that I would have been like, oh yeah, let's reverse this. Let's reverse this and buy yields. No way. That's just too... I'm too pansy. You know, there was a time when I would take that one every time, isn't there? When I was young and stupid. I guess I'm still young and stupid. 37's not that old. And there's definitely an inverse correlation with the USD could be expected in quiet markets, says Alligator. Yes. Ooh. Arbing ZT and 2-year cash bond, the sweet spot is something like 20 million. You make about the 2-year yield plus the ZT volatility, which is like 9% annualized. Okay, so here's a question. So here's a thought. Could we do something similar with a corporate or municipal bond where the minimum amount required to invest would not be as much? You know, now we would have the added risk of, you know, whatever divergences you get between the treasury and that particular corporation or municipality's bonds, right? That's an additional, yeah. Well, of course they wouldn't have a futures contracts, but you could like one side of it would be the corporate bond and one side of it would be the treasury, something like that. Or rather, it would be an arbitrage trade where you own the municipal bond and you hedge with the treasury future. Think that we could make that make sense? Do it with ZB and the mortgage. Sure, that would be perfect. Wait, where can I buy? I have to go look where I think I have a couple of websites, the old PIMCO trade from the 80s. So can I buy quote unquote mortgage bonds at like $1,000 a clip? Is it really? Well, I kind of like that idea. But that kind of suggests there'd be competition, right? We'd have to do some numerical research on like what is the mortgage rate minus the treasury rate and under what conditions does that increase or decrease. Still stay same 100K face value. The only reason why I'm thinking about this is because I know that there are a lot of bonds that you can buy out there in you know, $1,000 at a time, $1,000 at a time, right? So, and the other side of it is, I don't have to hedge myself with ZN. I could do it with micro yields. So that would allow me to do the arbitrage trade on a much smaller amount. Oh, look at that go. Wow, wow, wow. And the dollar crashing down again. I can't help but feel like that somebody was saying, yeah, we actually are going to continue going up, Seth. You should get back in. It's too late for me. I don't want to get in after a volume spike like that. Look at the 10-year. So this whole time we've been saying, well, things haven't really been cooperating. Minimize that. These trades up here were just the sim trades, and then I took a minus 20 and a plus 22. But you can see here, like, the volume was flat through this whole period, and now just that last bar, we finally saw some long volume come into the 10-year. Hey, G59, where you been? No, but so you're right that the futures are usually 100,000 per contract, base contract, right? But I have this instrument that's basically like 1/10 of that. Okay, let me try and approach it the other way. Okay, if I take one contract in micro tenure, what would be the best instrument out there to arbitrage it against? And it would have to be, you know, the smallest one we can find. So I might still have to take multiple contracts over here, right? But I'm looking for like the minimum amount. And I'm just saying, there are some bonds that you can buy that are, you can buy $1,000 at a time, right? Oh, actually, no, we could do it with just the treasuries. No. We could do this with just the treasuries, actually. Because, yeah, micro 2, micro 5. So like I could come in, because you can just buy $1,000 worth of treasuries at the auction. Like you can just go to Treasury Direct and do that, right? So then what would the trade be? Buy $1,000 of treasury at auction, hedge yourself with 10 contracts of micro tenure, and play the basis of the spread on the instrument itself. Like, you run into pricing problems, sure. So when you what you call pricing problems, I would just mark as additional risks, right? So I think the big odd lot on Fedwire is 10K and 100K on BrokerTech. No, but you can't you buy treasuries in increments of 1,000 from Treasury Direct? It's a good move. I'm disappointed in myself. Actually, no, I think it was a good thing for me to have exited when I did. I was a little bit slow on the exit. But when did I get out of that? At 8:22, so it's been about 20 minutes. Yeah, but in the past 20 minutes, did it really go anywhere? Not really. I could have held it. You buy today and you have to sell 3 days from now because your micro contract and bond yield have converged. Yeah, so I think that the biggest thing would be that okay, let me try and think about this. You get a quoted bid-ask spread of 15 ticks. Today, this time around would have been a bad situation. Well, I guess it wouldn't be terrible, but so you got like there's going to be this spread, right, between the futures yields and the on the run yields, right? And as the month goes on, that's going to converge until the end of the month. They should become the same price, right? So I can take a position in the wait, so do the directions even make sense? Oh look, we shot right back up there. The dollar's still kind of being tricksy there. So anyways, okay, so let's just say, for the sake of argument, I come in and I buy $1,000 of bond, 10-year bond at 3.5, let's just say. Let's just pick an even number, right? So if the interest rate goes down, I make money on the bond, right? So I want to buy the yield, right? I need to pull out a spreadsheet. But so let's just say $1,000 because it's an even number. Man, this really came back. Now I would be happy. There's no way I could have missed that move. I definitely could have made more on my original trade, but the market is moving around enough that suggests to me that I wouldn't have had an edge, and that it was mostly luck which position I got out of, and I shouldn't stress about it too much. Because your contract is 1,000 times yield. I guess so. Yeah, it is. So that's what I'm saying. If I own one of these, and then so again, what would we expect to have happen? Okay, if the yield goes down, my treasury should go up. The value of my treasury should go up, right? But I want to hedge myself against the change. So I want to go long the interest rate. So if this goes down, no, because I make money this way. So I want to be the same way. I want to go dollar value of each tick is $1. Yes. So part of my problem is I'm looking at this and not this in my head. Okay, so for each dollar this goes down, I make $1. So I want to be long one contract here to cancel it out, right? So then over here I'm long whatever the yield is that I get, which is probably going to be a little bit higher. Yeah, it doesn't work. Because what's going to happen is I might get 3.5 interest rate over here on this, and over here I get 3.51, right? So I'm already down on the trade 1 basis point before things start. And then, you're arbitraging them on those coming into convergence, and this one being 3.5 by the end, right? I'm buying up. It's the wrong direction. I would have to, for this to make sense, I would have to go short a treasury over here. That's interesting. Now you could still make this work, but you'd have to buy them at different prices and stuff, right? Like what you would have to do is you could use it as a hedge, right? So I buy the bond and anticipating that there will be a major change in interest rates that month, right? And then when the interest rate is done, then I could take the trade over here and then I would be hedged. That wouldn't make any sense. Why don't you just sell this? It makes no sense. I don't think it makes sense. I don't think the trade makes sense. Oh, you have a date tonight? Oh, congratulations. What are you going to go and do? You should have mentioned this one about 20 minutes ago. We had more time to discuss it. And just... That sure came back quickly, didn't it? Well, the dollar came back into that range. Drinks? Oh man, so I've never been drunk before. I don't know how good of a date drinks actually is. That's what most people do though, right? You just go and get drinks. That's good. Okay, so then we do need to talk about dating stuff. Okay, here I've got a secret for you. So we haven't talked about this before, and it's one of the most useful things I can tell you actually. Okay. So there was this study. They did this study where they would pair two people that were strangers, and they were given a set of questions, and they were supposed to answer the questions while maintaining eye contact, is what it was, right? And that is not the questions. There was a study. Where's the ones from the study? Here we go. 36 questions. Okay. In Mandy Len Carton's modern love essay, To Fall in Love with Anyone, Do This, she refers to a study by psychologist Arthur Aron and others that explores whether intimacy between two strangers can be accelerated by having them ask each other a specific series of personal questions. The 36 questions in the study are broken up into 3 sets, which each set intended to be more probing than the first. Yes. Okay. So here are some of these questions. Given the choice of anyone in the world, whom would you want as a dinner guest? Would you like to be famous? In what way? Before making a telephone call, do you ever rehearse what you are going to say? Why? What would constitute a perfect day for you? When did you last sing to yourself or to someone else? If you're able to live to the age of 90 and retain either the mind or body of a 30-year-old for the last 60 years of your life, which would you want? And they just keep getting in deeper. So like the deeper ones, if you were going to become a close friend with your partner, please share what would be important for him or her to know. Right? So here's what you got to do is like, there's kind of this whole thing of like building rapport, right? So like, think of it as like, you're starting from out here, or like here, you're starting from out here, right? And you're just saying something funny or fun or whatever the deal is to kind of build rapport, right? And then they laugh about it, then you can get a little bit closer, right? Then you can get a little bit closer. And then you would think that, you know, because I'm an autistic person, you would think that it would just be like, oh, you want to get closer and closer and closer until you're there, right? No. What you want to do is you kind of want to come in and out. So you come in, you're having fun, then you ask it one of the more intimate questions. They answer it, and you move to a different subject, and you kind of come back out here and you build rapport a little bit, and then you have the rapport to move in a little bit deeper, right? And a little bit deeper and a little bit deeper, right? I think the best question that anybody ever asked me was like, if you could get a superpower, what would you choose? You know, like, would you choose to be able to fly, to read minds? What would you pick, right? A superpower. That was probably the best one that we had come up with that was like not on this list. Okay. Precognition. There you go. I think I would either want to read minds or be lucky. I think that being lucky would be a great superpower, right? Well, I tell you what, that move, there was like that really strong move. It came back, and now it's back to where we were again. So the dollar kind of being a little wishy-washy, but maybe the dollar downtrend continues. You can get everything else that you need with precognition, maybe. So anyways, when I was really focused on that in my dating, I had a lot of success in dating. Like almost every time that I went out on a date, it resulted in follow-up dates. And we would keep going out until it just kind of like somebody would fall out. Would lose interest to move on, whatever, it would be fine. But I just had like a pipeline. But that's the real trick, is like the whole thing is getting people to an in-person date so that you can do that, right? Because then at that point, you've put yourself in the best position to form a relationship. And I mean, really, the asking question things can form like really, really strong bonds with people, especially if you maintain eye contact through the whole thing. And then if you can't build a relationship off of that, then they weren't for you anyways. So it's no big deal. Right? Well, for me, it's like a fellow poor PhD student took pity on me and asked around and found someone instead of, well, there you go. Hey, just run with it. So then here's, since this is a blind date, here's the other thing that I would say. Okay. This is your plan of action, is to build rapport with this person, and then ask this set of 36 intimate questions. Go and do a Google search for it, okay, for these questions, and make up your own list of questions to ask, okay? You are going to try and go through that list no matter what. Like, even if you get there and she is like butt ugly, okay? Your goal is to build the relationship and see where it goes first. Because what we do is we will make snap judgments like the instant that you see them and within the first few minutes of it, right? And it turns out that those judgments are not really very good at predicting how good of a relationship you can actually have with them. So ignore those things and just work on building the relationship. I will let her blabber and keep buying her alcohol. I'm telling you, man. How do I explain this? You're gonna do it, and you're gonna ask the questions, and you're gonna watch them, and you will consciously see what it's doing to you, and you'll realize how powerful it is. Like, if there's anything that's like a cheat code in dating, it's that. Serious. It's about time for me to get going. I feel kind of weird having taken 2 trades today and it just kind of like came out as a wash. I feel like I could have been more aggressive and made more, but the way that it all played out kind of suggests to me that I didn't really have a strong edge in that situation. And I guess that would make sense since it was kind of like an inline event, and the price action has been really random and varied, and the thing that we were really relying upon for that second trade was our correlation with the dollar. So last time I rehearsed about asking questions. No, you don't rehearse them, you just know the question you're going to ask, right? So you go, okay, So we're gonna be having fun, and then if I feel like I'm building a rapport, then I'm going to ask them, okay, if you could have any superpower, what would you choose? Right? You don't rehearse it. You just know what the questions are. You just have the list of questions. What is it like appearing before a markets regulatory committee? That sounds terrifying. 11 years ago, jeez. Ugh. It was a slog fest. Yeah, what should we put in today's title? I learned 3 new F word very Wait, freak, fetch, F. You can just say F. Those are probably the 3 most popular in Utah, at least. I'm gonna say CPI in line plus advice for date night. There we go. That's today's. Oh, and it's the 12th. I have it. It's the 11th. Man, this is. You know what? We really are missing out with when. I believe that her computer just died and she never got it replaced. But yeah, we're kind of hurting without Win to come in here and tell us things like you have the wrong day on the date and so forth. But that's okay. We love her regardless of where she's at and what she's doing. I will see you guys tomorrow. In the meantime, stay excellent, team.